Bitcoin's extended its correction to 6 days, now down over $12,000 and very close to a 10% correction. We're looking at the capitulation signal that is forming in traditional finance and how that's affected Bitcoin and cryptocurrencies in the past to give us some sort of idea, some probabilities for the outcome in the future. If that sounds interesting to you, hit the like button so you see more of it pop up in your newsfeed, and of course subscribe to the channel with the bell notification on so you don't miss any of the updates. I'm going to be updating you on the macro cycle, looking at real estate cycle, the stock markets, commodities, and of course Bitcoin and cryptocurrencies today. It's leading on from the previous videos that we've covered with the likes of the resetting stage of this period in the cycle. So now down 6 days, $12,000, getting very close to the 50% level, which we've talked about, that the markets like to get attracted to. They get pulled in the direction of the 50%, using it as support, and if it breaks down, then using it as resistance. It happens time and time again. We've seen it over the course of basically the history of Bitcoin, stock markets, cryptos, you name it. If it has a chart, it loves the 50% level. So those levels still are at $11,000. So although we may see a rally over the coming days, it still seems there is time for more consolidation. And the consolidation continues with what we're seeing in terms of the cycles and the market sentiment. It's shown to have some repeating patterns. Basically, the markets rhyme. And if we get those years right, those cycles right, as Gann has taught, then we're able to put together a roadmap for the likelihood of what comes next. And as we've been pointing out leading into this period, this Q3, early Q4, there seems to be a period for Bitcoin and for the stock markets that they go into a correction, basically profit taking over the period that's just happened. We've seen pretty significant gains from the April low, and over the last cycle, there was that correction into August and September, finding a base, and then the rest of the cycle carrying out runs you into those highs. Now, our daily videos cover many detailed charts, data, indicators, and our forte, the cycle analysis, to help guide us through the investment cycle. So if you're a brand new subscriber to the channel, then I highly encourage you to get our weekly reports on Bitcoin, altcoins, and the economy, including the real estate cycle. They're easy to read in under 5 minutes each, making them extremely digestible for all investor levels. There are 3 reports coming your way starting your week from Tuesday. It'll get you up to speed on how we forecast the markets and how we've been able to profit during uncertain times leading into and out of the cycle peak. It's completely free, so subscribe today using the link in the top of the video description and you'll receive your first report shortly. So the capitulation signal, before I get back into a little bit more with Bitcoin, is the 3-bar rule. In this case, from a high to a low. You may have heard about it many times before, especially if you're following the channel, but if you are new here, we've used this pretty successfully on the previous highs on Bitcoin, looking at lower highs and lower lows from significant turning points. December 2024 was one of those significant ones here, lower highs, lower lows, and that basically stalled the market out. Didn't go anywhere and then crashed 30%. And the previous time to that was March 2024. We had the same signal happening as we zoom in. 1, 2, 3 of those, lower highs, lower lows, forget the color, and basically the market stalled, went into a 30% correction. Now we've seen it on the S&P 500 multiple times, but there are different strengths and weaknesses to that signal. So the main reason why I'm looking at it for the current price action and the current period that we're in is because in the past, when we've seen it with the S&P 500, it's basically led to the market stalling out. And generally, if the S&P 500 is stalling, consolidating a move before another move higher, Bitcoin's not really going to go on any significant runs, barring a few exceptions, which then it does go on its own correction anyway. So just looking back in recent history, the S&P 500 ran up into a new all-time high late December 2023. So there's the all-time high, ran into a high, then it had that signal there. And the way I'm showing these up with these little red arrows is the Gann Swing Pro. And from this signal, market went further down, it rallied again, had another correction, and then finally broke those highs. And it's just about, the way I look at it is a time frame. And in this case, it was 22 days, so basically 3 weeks until it broke to a new high. And in terms of trading days, of course, the S&P 500 doesn't trade on the weekends. It's going to be 14 trading days, but we want to know it in real time. So about 3 weeks was the time frame that we had to endure until there was a new all-time high price. The time to a low was 8 days, and the time to the higher low was about 20 days. So again, roughly about 3 weeks. It still went to a new, fresh high price. So if we have a look at what Bitcoin was doing at that time, it was basically running into its peak and then corrected 20%. That was from 49K to 38K. It consolidated and then started to run higher. Then we get another signal. However, it's a much weaker signal because it didn't break any key lows. This one, it broke the low, consolidated, and then started to move. This one didn't, and the market kept running higher. Then we got another signal here on the S&P 500. This was from July 2024. You got the 3 bars, a little bit of a rally, another correction, another rally, and then August low happened before the market was able to climb out of that. Bitcoin, through that period, was also running into its own high before everything crashed down into that Japanese yen carry trade low. So we saw the signal on the S&P 500. Bitcoin was still looking weak. Bitcoin had its own 3-bar signal. As you recall, we talked about that as well back in March, and then the market corrected. That was a total of 30%, and it took about 5 months to get to the low, and then another few months to recover out of that low. S&P 500 had another signal at an all-time high. It didn't break the lows, and it wasn't as strong. It then rallied with the election. That was the Trump election. Everything sort of boomed after that point, corrected again, but at a higher low, and then the market ran higher. But you can see from this signal, the market still stalled and took its time to get back to that high. Bitcoin was climbing slowly through this period, and you had a major catalyst to flip it. So without a major catalyst, it's going to take its time to grind higher. The next time we saw that signal was just before the April tariff low. This was from an all-time high price. So that's the high there. 1, 2, 3 red arrows. And there was only minor rallies, crash down, minor rallies again, another correction, and then into that final low. And again, through that period, Bitcoin was correcting, it was crashing down, and then it ran into its April low as well. So it took all that time to get through the signal, especially from a significant high, and this one started to stall the price. You can see the price didn't really go anywhere from this point, but it wasn't strong enough yet to stop the entire market. We had this catalyst to get through, which was the election. The market just consolidated or basically distributed through that period and then came crashing down. So fast forward to the present time, and we have an all-time high for Bitcoin, an all-time high for the S&P 500, and now we have the 3 bars for the S&P 500, which suggests there's some longer consolidation to occur, which we've also looked at when it comes to the cycles here. This is for Bitcoin, but in particular also with the S&P 500. So these are the cycles here for the S&P. There's a correction into August, consolidation, September, October, and the market runs higher. That's looking at the 10 and the 20 year. So overall, how I'm looking at trading this, I think there's still a little bit more work for the market to do. This is just looking at the cycles, the price, and the time. We haven't even got to the sentiment yet, but from history and looking at these signals, it seems like there's still a little bit of time to go to consolidate the move before it's ready for that next move higher. So essentially, as lame as it is, it seems like a little bit of patience is required through this particular period. Taking a look at the sentiment now, we haven't seen any sort of sentiment shift for traditional finance. We have begun to see that sentiment shift for crypto, however, sitting at neutral. So we got 44 and 50 showing up. At least that's giving us some time in the sentiment to reset, potentially waiting for this to happen as well for the S&P 500 so that we can get the market sentiment reset. The lower highs are there. The lows are basically equal here at around neutral 54, again neutral 54, and again neutral 55. So it looks like it's on its way just to test those, but it might be another couple of days until we can get there. Now the NASDAQ has also shown up this signal, so rather than go through the whole thing again, we can see that there is some consolidation happening at these highs. It's above the previous swing lows, which is a good sign. Yes, the signal's there, but it doesn't look like it's going to be as strong as prior signals where the market had broken down and taken out the lows with those signals. And it's still above the previous all-time highs. So even if it does correct, there's some consolidation happening. And the consolidation looks still similar to what was happening in 2020. So 5 years ago, looking at the 5-year cycle. We're using that because of the extreme event that happened earlier in the year around the same time that the COVID collapse happened. So you had the COVID crash low in March. We had the tariff crash low in April, basically 3 weeks later from that event. But the pattern has continued to play out relatively well. 5 years ago, it ran higher. So it ran a little bit harder and faster here, but it also corrected much, much further. So it went down about 35, 40% at the time, whereas the tariff correction was about 26%. So it's running a little bit harder here, but it had to come out of a deeper low. The pattern that we're watching though is one of consolidation in some sort of grinding uptrend. And we can take a look at it without the swing on and looking at the line. We've still got higher highs, and for now, higher lows. There was one small lower low here, and then it ran higher. So overall, the cycle is continuing to follow what was happening 5 years ago. And post this consolidation period that we're seeing in Q3 and potentially early Q4, the market started to run higher. That's for the NASDAQ. And our theory is that Bitcoin is also following suit there with correlation to the NASDAQ, at least in this period of the cycle. It's not always going to be that way. They don't always correlate forever, but there's a period of time that they do. They go in sync and then out of sync. And the problem that lies with a lot of traders is that they think that there's a silver bullet to the game and they look for the correlation to last forever, and it just doesn't. In terms of the S&P 500, as a quick recap on the 5-year cycle, we can see that the similar trajectory is also occurring. We've got this upwards trend of consolidation, a few lower lows or equal lows here on the closing price. And then what happened later in the year is another rally higher, more consolidation. So I'm still iffy about if that is going to occur later, if we happen to see it now. So this might be brought forward to here, should we see this continue to consolidate, especially off the back of the fearful news that's out there, which was also out there in 2022. So we go back 3 years ago, there was inflation fears in 22. There was talks about the Fed having to lower rates very, very quickly. And there was a lot of talk from non-industry leaders about recession. Cardi B posting about when are they going to call a recession. Elon Musk replying to people in those earlier days in 2022 saying, how long do you think the recession will last? Musk is talking about probably going to last until 2024. Of course, none of that ever happened. And I think it was just signs of the time that the fear was out there. The market sentiment was extremely fearful, yet the price was basing before we saw new all-time highs. And from Musk's forecast of spring 24, we can see that spring 24, that's your March through to June period, it was actually hitting new all-time highs. So the stock market was at new all-time highs. And so I think that's kind of similar to what we're seeing now. There is the Fed worried about tariffs, inflation, the labor market, more headlines, pretty much the same thing. Most officials worried about inflation moving higher. And even if they do cut rates, I don't think it's going to be enough in the long term to basically stop any of the wheels in motion with where the cycle is going. And at least for this interim period, the next 6 to 12 months, probably going to go higher, even if we see this consolidation now. And we can see with the interest rates, as I've been pointing out every day on the channel, the cut is getting less and less likely. It's still at 80%, 82%, but the pause now is up to 18%. So day by day, we're about 28 days out from the next FOMC meeting about the interest rates. It seems like it is moving more towards this. I don't know if it's going to be enough to get there, but there's going to be some sort of cut eventually. And the US dollar is also holding steady, pretty much just bouncing around at 98. So there's no real breakdown at the moment after this 3.5-year new low. Lots more on this in future videos, so make sure you are subscribed. And of course, subscribe to the free reports that are coming out 3 times a week. Now, over to Bitcoin and cryptocurrencies after we've got an understanding of this signal and what I think, at least, according to my opinion, you're welcome to have your own, what I think is coming up next. The prices here, looking at the Bitcoin ETF flows, have been flowing out after some record numbers back in July towards those peaks. So we're not at record number lows. We had record number inflows, but the outflows decent, but not really at any sort of significant capitulation lows, which leads me to believe what I've been talking about earlier in the video about this capitulation signals taking a little bit more time is possibly coming up here, but nothing too concerning at this stage because of where Bitcoin sits overall. This is still in the strong half of the short-term 50%, being way up here, and also in the longer-term 50%. That's the key one here. So the 50% is down at $99,000. So any sort of movement in here, okay. Even better if it remains as high up as possible and consolidates through this period that we've just discussed. The liquidations continued to flow in. We've had about 300 to 400 million, so wiping out more of that leverage. Another sign that the market wants to consolidate at this area. Got rid of a lot of longs, so all that hype with Bitcoin going 150, 200K, and now we've got rid of some of the shorts in the last 24 hours. The exchange volume has continued to remain elevated, which is a good sign for the bull market. We don't want to see it break back down below these lows or stay under there for too long if it did happen to break down. So that's at around 30 billion. That just means more money is still sloshing around in the cryptocurrency space, even though the sentiment is dropping off. So it's still, the signals are still showing up that the market wants to reset at this point. Search volume tanking over the last week from Bitcoin, crypto, and Ethereum. They're the search volumes up here, blue, red, and yellow. They're all falling off a cliff here. People aren't interested. That's absolutely okay for this stage. And the USDT dominance also dropped yesterday. So another good sign, at least in the very short term. It's the direction we want to see it go in, where the money flowed back into Bitcoin, back into ETH, back into altcoins, as I'll get to in just a sec. But for the major bull market, we've got to start seeing it get under 4.1%. It can take its time. We've talked about consolidation. We've talked about capitulation signals and what I think is happening next. We don't want to see it go above this level. I posted about this on X yesterday, so if you're not following, get over on X. I can quickly update you on charts over there. The official link is in the video description. Don't get scammed out there, of course. There's a lot of scammers. And to the downside, the bull market is especially where we want to see it go, and that's under 3.7%, because that's essentially where the market has been held up for this entire cycle. So when the dominance of the stable coins gets this low, it's hit, found support and bounced, found support, bounced, found support, and bounced. So we haven't been able to break 3.7% yet in this cycle. Ideally, we do. The dominance for Bitcoin has also fallen in the last 24 hours. That's off the back of ETH and some of the major altcoins regaining some of their share. So this is the alt versus Bitcoin pairs. And it's getting very close to the 58.8%. And I want to see this level because it would overbalance the previous correction. So far, it's equaled the previous correction. That was at about, I think it was 6 or 6.5% correction on the dominance. So that dominance leaving Bitcoin, going back out into the altcoins. And we're basically there now, except the positive here for the altcoin space. If you're an altcoin lover, holder, degenerate, this has happened over a longer period of time, which is exactly what you need to see for the altcoin season to start to generate. And so this is over a much longer period of time than the last one. So once it breaks to 58.5, and I think by this stage it's kind of inevitable, there's no guarantees, but it's very much on that side now, then we're going to have that overbalance signal. So it's going to look pretty damn good for altcoins, not so good for Bitcoin dominance at that stage. Doesn't mean that Bitcoin collapses, just means that it's probably going to get even more so into a risk-on environment. And that's off the back of what we've been discussing with this consolidation and time needed in the markets, especially just to figure out all of this other fear and the Fed and the tariffs and everything else that happens in a wall of worry as the markets continue to climb higher. Next up is the others dominance chart. It hasn't fully blown out here. It hasn't broken above the resistance somewhere around this 8% and still holds below 7.8%. That's that white line through here. It has not gotten above that and still needs to get above those highs. So the strength from what the charts are saying is very much so in the largest cap alts, which is what you do want to see for an altcoin season. You're seeing a lot of the market share going back to ETH and XRP, some of it going into Solana in the last 24 hours, so on and so forth, right? They're getting the share, and then you want to start to see that flow out into your shitcoins outside of the top 10, and that's what this chart here is representing. So we got higher lows at the moment, no higher highs, and once we could see that rotation from the large caps into the small caps, that's when things can go a little bit crazy, and we may even see this come up to the 8.8 to 9%, and then somewhere around that 10%. But it needs to get well above the 10.5% to get an alt season like previous cycles. Previous cycles did mega gains. This is what everyone's gotten excited about this cycle. That's this cycle roughly around here. And it's really done absolutely nothing through this whole cycle. There's been the old ones, of course. Other people have made money. But overall, to get a feeling like previous cycles, that's what it needs to do. That's the move there. That's 2021. And then 2017, there's the move there. So basically all of that dominance going into altcoins and skyrocketing the altcoin dominance chart over here. So that's for the big move where basically everything starts to take off. And to get to that point, ETH still needs to climb a little bit higher. It's still rejected off this 10-year resistance level. That's going back October 2015. The lows there, December 2015. The low here, September 2019, January or so 2020. And that's where it broke down from to get to this low of 1.7%. So currently the highs are around 4%, sitting at 3.8%. It needs to get above this level here, consolidate and start to grind higher. The target I've got for somewhere around the end of the cycle, ideally it can get there, is at 5.3%. So the 0.053. And that is our 50% level of the ETH BTC bear market. So that's going to be a good thing for the altcoins, Ethereum for this cycle. If you're worried about ETH holding it long term as some sort of quote unquote investment, 5, 10, 20 years, if it does not break that level, it's likely to come back down and break these lows. So it's unlikely to flip Bitcoin, therefore not a great investment. Short term, medium term trading, good stuff. But unless it can get above that and hold, then probably not a great long-term investment. Doesn't matter though, does it? Because Ethereum price USD is still holding really well, still holding above the levels. It did come back and test $4,000, which are the previous highs. So far, so good. And if we're only in it for this cycle and only in it for the gains, then who cares about the next 5, 10, 20 years? You just got to pick your style of trading. So ETH previously has done 6 days down, 11 days down in this run. This might be that time that it's going to do a little more than the shorter term corrections. And we can look at the corrections here. High to the low is now 6 days. So it's equaled this correction here, except it's done more in price. So there's $727. This one's $583. So I suspect this correction is going to be longer now than this one. Well, that's 6 days, but it's gone further in price than this correction. Therefore, we now have to look back to the prior correction. So this one goes from 2,900 down to the low of 21. So similar in terms of price, but in time that's 11 days. So another reason here why I think this consolidation, even if it bumps a little bit higher, it's still in that consolidation range like this. You can see it went slightly higher, still in the consolidation, corrected, and then started to run higher. So the chart to me is now saying that this correction is going to take longer than this and probably something more like that. And we could potentially get into something like 2 to 3 weeks instead of just this 1 week that's happening right now. This is what's happened to XRP. It has gone into a much longer consolidation after getting rejected at $3.30. Still doing well, holding above 260, which is a key 50% level. So it's still in that stronger half of the short-term 50%. Long-term invalidation if it breaks this level at $2. You can see there was a big low form before it took off. There was another time it broke down, quickly got back above. Support, 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 a lot of support at $2, short term, longer term. So I think if it breaks this $2, it could be in a little bit of trouble. But for now, it's still above that level. Just keep that on the charts. If you needed somewhere to absolutely get out of the entire position, that's probably where I would be looking. And Solana did climb back above 180, still above these two highs of 210. And that was the long-term level there that we're watching. 210 back here, 210 in this area, support 210, 210 and 210. So it's got a little bit of work to do to get back above those. How are they faring against their Bitcoin value while Bitcoin dominance has been falling? We can see Sol BTC is on the climb here, but it's got to get back above 0.0018 for any sort of significant moves up to the 50%. So I don't know if this is going to be one of the leaders this cycle. It's just going to take back some of that market dominance. Ideally, if one of these ETFs come out in October, which leads us to that time frame, then we could start to see things go a little bit wild, get us back up to those levels and spike like it did back in 2024, again 24 and early 2025. That's probably like best case scenario to any of these highs. But to get back to a new all-time high for this cycle seems a little bit unlikely. Lower highs, higher lows. XRP BTC still not getting above that very, very strong resistance at 3,000 Satoshis. So it's got to get back above a couple of these levels for it to go to any sort of extreme heights. Otherwise, we're just looking at some sort of reasonable targets, 5, 6, 8, $10, who knows? It's going to depend on where Bitcoin is, but I don't think we're going to see any sort of crazy numbers like 30, $50 XRP. It just seems absolutely out of this world and out of the question at this current stage of the cycle. And finally, for Bitcoin on the monthly chart, we're in a red month at the moment. 11 days to go for the close. Ideally, this close is above the 7-year resistance line, and there's more consolidation through August, September before we can get this blow off top move or a bit of a pump up towards our next price target of the mid $130,000 region. Hit the like, subscribe to the channel, link in the top of the video description for our free reports, plus $100 off TIA Premium is on that email. I'll see you guys back here at the next video. Until then, take care and peace out.